A very good morning to everyone. It's a Friday, the 28th of August, and as we wrapping up today's Business and Markets Week, let me welcome Ali Kansachi, the CEO at Rich Frontiers Management. Good morning, Ali.
Morning, good to see you, boss.
We appreciate your time as always. And of course, Onyeka Ijema from Vertiva Capital is the industrial analyst, goods analyst at the investment bank.
It's a pleasure to be here, boss.
We appreciate both of you joining us today. Let's go a bit of a recap the equities trading day, 5 of the African continental exchanges on Thursday. Nigerian market softened 10%, about 0.1%, I beg your pardon. Ivorian market was deeper by 0.78. Egyptian top 30 index was down less than 0.1%. Kenyan market roared 1.49%, perhaps on the back of the NSE PLC's skyrocket earnings in the first half of the year. South Africa's GSE 0.5% in the positive territory, 56,869. Look at the East African market, and I'm sure Ali's can't wait to talk about the NSE's PLC 56% net earnings, showing how demutualization has really worked for the South African GSE as well as the NSE PLC in Nairobi. The bank earnings still coming through. NCBA net earnings 2.6 billion on the back of that merger, which were done earlier. Uganda exports, coffee exports continue to surge. And in the aviation sector, airlines are getting back in the skies, and the East African airlines, Fly 540, Air Kenya, Safari Link, are not getting left behind. Ali.
Yes. So thank you, Barson. Let me start. We've had a slew of results at the Nairobi Securities Exchange. The first headline of yours was the stock exchange's results. These were shares that were sold on the stock market a little while ago, and quite an eye-catching top-line number, 356% surge in those earnings. Now, the top-line revenue stayed the same. Really what it was is a stripping out of costs. They took out 100 million shillings out of their cost base, and that's what bumped up those earnings. Otherwise, revenue was very similar to the previous reporting period, but this shows that they are nimble, that they're able to adjust to the market conditions, because market conditions, as we all know, in the first half were quite tough. Volumes dry, there was a lot of selling from foreign investors, then volumes tended to dry up. So this was, I think, a significant outcome for the Securities Exchange. We've had a bunch of banking results. You referenced NCBA. NCBA was is the outcome of a merger between CBA and NIC Bank. Both were tier 2 banks which merged and effectively became a tier 1 bank. They reported earnings down around 28-29%, in line with industry peers. Everybody's been putting up their loan loss provisions. I don't think there were any surprises in these earnings. We're talking about price earnings ratios of around 4 and price to book of about 0.6, to give people an idea of the valuations. And this is after the sell-off we've seen at the NSE, but obviously people are factoring in the full year earnings for this year into the equation. We had ABSA report as well, and like the parent company, ABSA was an outlier here in Nairobi, reporting profit before tax down after exceptional items, down about 90%. And basically what they've done, which is different to the other banks, other tier 1 banks, is they've provisioned on their performing loan book in the expectation that they're going to take, they're going to have to provide for loans which are currently performing but will not perform adequately in the second half. So I like what they did. I think it's aggressive. I think it's ahead of the curve, and I think the market will respond to that, just like they responded in South Africa. And finally, we had Kenya Airways come out just this morning before I came to speak with yourself. They've hemorrhaged money, total income down 48%, reporting a loss of about $143 million, a comprehensive loss of $210 million because of leasing costs and fuel hedging, which went wrong. And they're in a negative equity position of about $400 million. Of course, the government is seeking to restructure that balance sheet, but really, as it stands, it's no longer a going concern, if one is going to be accurate about it. You also touched on two stories: coffee exports out of Uganda. We've known about that. They've really got it right. They're booming. And if for a change, the coffee prices are beginning to turn higher, notwithstanding the Brazilian issue, which is a very weak currency, which means they tend to flood the market. So really a top outcome for Uganda. I'm very impressed with what they've done with the coffee market.
Interesting, looking at the earnings, ABSA decided to take the pain up front. That's what the ABSA South Africa says. That, look, let's just take the pain up front, make a wider provisioning, and then work our way backwards from there and see how things go to the end of the year until maybe early next year, maybe if we have some form of normalization. But that's a very bold way of doing it. Thank you, Ali. A bit of a comeback here to the Nigerian market, where the Nigerian West Africa, of course, Nigeria's authorities given Ernst & Young the go-ahead to lead a team of forensic auditors to look into the last nearly 20 years operations of the Niger Delta Development Commission. Angola came out very strong with news around the National Energy Roadmap 2020-2025, foreign investments into these projects for new oil discoveries will be $679 million. The Angolan authority says they will be putting in $144 million into this new energy direction. And Cote d'Ivoire revised its growth forecast down from 7.2% to 1.8%. And of course, the big story from Abidjan yesterday, the re-election of Akinwumi Adesina, the president of the EFDB, the first time that going by a vote, there's 100% vote by all 81 member shareholders. Ayodeji, let's welcome to the program Ayodeji, the CEO at Afrinvest.
Good morning. Thanks for
good morning, Ayo. Ijema, what's your take on the story around the Angolan authorities going for a new energy roadmap?
I think it's a very ambitious project. It's one that they should be going for, but it's also a very ambitious project. Looking at the headlines, they're looking to discover about 57 billion barrels of oil and 57 trillion cubic feet of gas. Looking to welcome in almost $700 million in FDI. While bringing in almost 200 million of equity themselves. It's a really ambitious project. They should be going for. What I'm more concerned about right now for them is the policy direction that we support this. It's all well and good to come up with these plans and these roadmaps. I mean, Nigeria, for example, has done this with a bunch of times, but without the policy to back this up, without the policy consistency to support this, it's going to be it's just going to be a wish. Similar to Nigeria, Angola is very dependent on oil earnings for their FX reserves. They've also had the same issues in the energy sector. A lot of very little transparency. A lot of cases of corruption. Foreign investors get jittery when they want to think about investing with the Angolan government, just like in Nigeria. And so the most important thing there, has to be the policy, strong policy statements to back this up. We've seen that it is very possible with Mozambique doing something similar, attracting foreign investors into the energy space.
Okay, great. Ayodeji, I'm going to come to you in just a second, but let me quickly allow Ali to intervene in the Angolan story for just 1 minute. What's your take on this project, New Energy Roadmap?
So, I mean, Angola's got serious challenges. We got debt to GDP of around 120%, but the new president, Lourenço, is seriously trying to reform the system. And I think, given the tribulations you've had at Sonangol, where the previous president's daughter was, in charge of the shop, what he's saying, he's setting out his stall, he's looking to make Angola a more attractive oil and gas destination. And I think this was long overdue. Obviously, what we got to watch is personnel changes, because we got a lot of holdovers from the Dos Santos regime, which was opaque, as my previous speaker was saying, and very, very difficult to navigate. So I think bold step, progressive, and but a very, very complicated situation economically.
Interesting scenario. We'll see how the new energy roadmap goes with Angola, but quite a whole lot of crossing the T's and dotting the I's on the economic side and politically speaking. Ayodeji, give us a sense of the financial markets week so far within the Nigerian space. We understand that the central bank, the DMO, are still firing on all fours as far as the treasury bonds, treasury bills are concerned. The central bank is not letting up in terms of the FX, wants to return to FX sales to BDCs by next week, August the 31st, according to yesterday's circular.
Yes, thank you. It's been a busy one for the fixed income market. So we had IAM maturities this week relative to what we had last week, and that's bolstered the activities we saw in the fixed income market. We saw that the primary market auction on Wednesday, and there were a lot of unfilled orders. But what we saw was more. Most of the investors are becoming more bullish.
Ijema, what's your take on the, for just a few seconds, what's your take at Vertiva Capital regarding the market week, looking at the level of the treasury bonds that the DMO placed out yesterday and the expectations on the new week in terms of the size of mature treasuries that are coming to the market for liquidity?
Yeah, so I mean, we had expected that from the last auction, we had expected the DMO to do something similar. We recall that at the last auction, they made a very strong statement that they're not selling as much because they wanted to keep rates at a particular point. I think that this is just a continuation. This is just a continuation of that coming. They're basically signaling to the market their intent. They're more interested in cost management than fundraising at this point. I think that's it's something that will continue.
Okay, I guess the internet is a bit wacky this morning. Ayodeji, you're back? Yes. Surprisingly,
we saw the CBN announce that they will be issuing dollar HOMO bills. And if you know, HOMO is meant for liquidity mop-ups, but I think because CBN is looking for all means to see how they want to get over these FX illiquidity challenges. But
so a quick one there, Ayodeji, a quick one. How will the HOMO dollar auction, how will it look like in practical terms?
Yeah, so based on my understanding of how it will work is that the CBN is trying to see how they want to attract the foreign portfolio investors, and they don't want also want them to be exposed. You know, currently what is obtainable is for some when you bring in you bring in your dollars, it's converted to naira, and for most of the foreign investors also try to hedge using the FMDQ futures markets. But because it's a non-deliverable forward, they just get the naira difference based on the current rate, and they still have to source for the dollar. So because of the scarcity of dollars and the inability of the CBN to intervene in the FMDQ market in the last 3 or 4 months, the foreign investors are not very comfortable with bringing in their funds any longer because a lot of their colleagues are still trapped, unable to access dollars. So what CBN wants to do as maybe as an incentive to see how maybe it will work out is to assure them that you bring in your dollars and we'll also give you dollars. So it's like a dollar fund. The interest rates based on projected interest rate between 3 and 5%. So CBN will be getting that dollars and may also be able to use it to maybe intervene based on the other pent-up demand to see how they want to reduce that pressure. But looks very unorthodox, and we feel that CBN should 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 see what they want to do to focus more on the main issue, which is the dollar liquidity. If we need to adjust our exchange rate, we know yes, Nigeria, it's really going to be painful. But the capital importation reports that came out today is a testament to how the foreign investors feel about Nigeria. Yes, we can link it to the COVID-19 pandemic, that because there were business activity reduced across board, but we feel that beyond the COVID-19 pandemic, the FX policy is also scared away a lot of investors. If not, when you check the data, if not for the loan element that accounts for about 56% of the total $1.2 billion dollars within the second quarter, that loan, which mostly for most of maybe foreign companies supporting their local companies, maybe due to the COVID-19 challenges, trying to support them for businesses, it means that the data should have dropped very significantly. FDI dropped to as low for the quarter about $124 million. And if you check even for bonds, there was no bond transaction within that period. They were not comfortable to go long. If you also look at the money markets, the short time that we feel they always run to has also reduced. And we feel that there's something needs to, this FX would dry up very soon, because if we don't quickly tame or readjust our FX policy, it's really going to affect the FPI and the FDI, which we need to grow our economy.
Thank you very much. A very comprehensive explanations of how things work out there. It is a whole lot of fireworks right now, just through everything the central banks got into the fire, hoping that the fire will die out. Let's talk about the Southern African markets very quickly and make some progress with the economy set to contract 40.1%. This is what you call skyfall. Meantime, mass mart retailer in South Africa lost widens to $65.2 million because of the lockdown. And pharmacare by the name Aspen sees 7 to 11% full year 2020 earnings. Of course, the pharmaceuticals are the ones part of these few sectors making some gains under the pandemic period. And Telkom South Africa is now likely the third largest mobile operator after Cell C. Numbers dipped about 25%. Ali, let's talk about the South African economic forecast. It looks like the only one heartbreaking story I'm seeing there.
So this is on an annualized basis for the second quarter. We know they had a hard lockdown. President Ramaphosa obviously was battling the virus, which is now, by the way, the curve is coming down dramatically in South Africa. So this was the major quarantine reporting period. It was a very tough period. Most businesses were shut down. People were not allowed to move around. So really, this was expected. Estimates for the full year are between -7% and -8% GDP decline. South Africa has been on a negative per capita income basis since 2014. So it's a tough call, but I think investors are now looking through those numbers. You've seen a little bit of optimism come into the Rand, which has got a 16 handle again. And I think on balance, this number was expected, but it's still pretty dramatic when you have a look at it. Massmart, that's interesting that they didn't, that they did not perform. Supermarkets worldwide and Massmart is positioned well for the mass market, underperformed in my view. The sweet spot is software and pharmaceuticals these days, and that's interesting that Aspen Pharma is posting growth. We know the world today, health and software, really, if you're in those two spaces and you know what you're doing, you're going to make money. So that was a good result. Telkom, bit disappointing, minus 25%, given the circumstances, data usage, people being locked up. And I think that's more to do with the business specifically than with the demand side of the equation, which has grown in the quarantine period.
Thank you. Let's touch on North Africa very quickly. I want us to give a few thoughts to the AFDB's annual meetings this week. So we just look at the conflict in Libya. The chairman of the oil corporation, the NOC, says the Libya oil is now locked down because of international political goals. So that's putting it up front there in a tweet yesterday by the chairman of the NOC. Meantime, Egypt's stock market yesterday, of course, was up because of gains by the big commercial bank, CIB. And Greece parliament yesterday, or parliamentarians gave a majority backing to the new maritime accord being forged with Egypt. Ali, I just want you to pick up one story here regarding the Libyan oil market, or Libyan oil production, rather.
So look, the Mediterranean is a red-hot geopolitical hot potato. And what has happened is you're finding Turkey and Qatar on one side, you're finding Greece, Egypt, GCC on the other. And of course, you've got this proxy war, which has gone on since Colonel Gaddafi was toppled in 2011. And, what I would expect now is, given the animosity between those groups, that we're going to see Libya basically in a Libyan production very much compromised, and it's going to be very difficult for it to reach the market because one side is just going to use asymmetric warfare on the production facilities if they can. So yes, I think Libya's out of the frame, which probably supports the oil price and is probably favorable net for places like Nigeria and Angola. And, we've seen a good recovery. How much further we can go is debatable.
Very debatable. Finally, let's have a minute to run or less on Akinwumi Adesina's re-election. 100% vote. That's quite unprecedented. Ijeba, give us your thoughts.
Well, yeah, I think yesterday the Nigerian and African social media space was awash with congratulations and praises to Akinwumi Adesina, and it just reverberates the amount of support that the Africans have for the incumbent president. I believe that he has done a fantastic job, especially in the space of agriculture. And he has also, the AFDB's response to the COVID-19 pandemic in Africa was also pretty decent. All the while battling, corruption allegations from the U.S. administration. I believe that I'm really happy that he's back. He's back in this, and 100%. Yeah. It was expected.
It was expected. But that's been a tough walk, Ali, isn't it?
Absolutely. Look, I mean,
it was a tight rope down to yesterday.
Yes, I mean, he handled the situation extremely well. He's had a lot of turbulence in the last few months. There's this whole debate about governance. So I think he's handled himself very well. He's set out his stall. He's a very charismatic figure and extremely articulate, and obviously deserved the second term.
Yes, 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 yes. So a whole lot more for him to do. Ayodeji, congratulations from around the world, within Africa, by presidents and everyone trying to associate with his success. Success definitely has many friends.
And beyond even Africa is a good one for Nigeria. At least one of those good news that we feel that we need once in a while, amidst a lot of the very negative news and data around. So I think a big congratulations to Dr. Adesina, and at least after the turbulent period towards the election, you can now sit down. The plane is settled, and you can get to work. And we are hoping that this, especially Nigeria and Africa as a whole, will be able to see some of those great ideas that is shared over time, that we'll be able to see, especially for the Equity Bank. That's the one I'm trying to. I'm looking forward to seeing how that will play out, so that we can even have more Nigerian banks try to see how they want to also copy that model, because we need that to be able to grow our economy than supporting most businesses with just debt, especially greenfield businesses with debt.
Interesting. So congratulations, everyone. Thank you so much. It's been a very interesting week. Ali, enjoy your weekend.
You too.
Onyeka Ijoma Adbetiva, enjoy your weekend as well. Ayodele, thank you so much. We know it's a very busy time, but we appreciate your being here on Frontier Africa Reports on a daily basis. Thank you. Have a great time, and see you back on Monday.